Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, with me Shail Bhatnagar, and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, you again have some red signs on the markets, especially the Nifty that's now slipped below the flat line, about 16 points lower in trade at 24,038 odd levels. The Nifty Bank is more severely hit as of now, 300 points lower in trade. For this one, it slipped below the 50,000 mark at 49,775 yet again, 0.6% of a loss for the Nifty Bank. Some more sectors have actually slipped into the red. You do see financial services along with the Nifty Bank, PSU banks, private banks, all three constituents down in the red. You have autos, consumer durables, even the Nifty Next 50 that has slipped into the red right now. The India VIX is now down by about 8% at 18.7. So some volatility has increased from the morning trade as of now. Within the top losers from the Nifty pack, you do have names, a lot of names now within that space. So apart from the life insurance names like HDFC Life and SBI Life that were down even in the morning trade, you have Bharti Airtel, Shriram Finance, M&M, HDFC Bank, Titan, some of the big heavyweight counters, even ICICI Bank, that are all lower in trade as of now. It's the PSU index as well that slipped into the red along with the indices that I took names of. So again, once again, you have seen some signs of sell-off emerging back on the street. Good afternoon, Shail.
Good afternoon, ladies and gentlemen. The day's high on the Nifty, which was 24,350, could not be held. Selling pressure from then on has seen the Nifty now almost breaking 24,000 somewhere midway. But the battle continues at 24,000. The low of yesterday is yet to be breached, 23,980, and of course let us see whether we are able to hold the budget low, which was 24,074 or so. At the moment there is selling pressure not only on the Nifty but the Bank Nifty as well, 337 points down. Remember, it's T-1 for Bank Nifty, tomorrow being the weekly expiry. It's a tough battle that's happening as far as markets are concerned. The advanced decline ratio across the board has started to favor the bears. Remember, we had started with 1700 shares in the green. Now only 981 shares remain in the green. 1300 shares are now in the red. In terms of volume, while one can say that there isn't much selling pressure, but look at HDFC Bank, 1.2% lower. Already 2,700 crores worth of transactions have been done. Tata Motors, 1,500 crores worth of transactions have been done. These are a bit worrisome because the stocks have sort of come off day's highs. There wasn't any support at that level. So a lot of option based selling is coming into the market. 24,300, 24,200 option puts doing pretty well in the market. So that is where the weakness is coming on, but there is one sector which is doing extremely well, and that's the textile space. That's primarily because Bangladesh, which is facing a serious political and economic problem, our neighbor, is one of the largest textile exporters in the world. A lot is expected in terms of business to move from Bangladesh because of political froth towards India. And that's the reason why you see garment exporters, companies that make and stitch garments, doing pretty well. And no better person than Gokaldas Exports to show you that kind of a rise. 9.93% higher. The counter was at 1,095 during day's high, almost 16-17% higher. But profit booking from that level, needless to say, this is a record high. Kitex Garments, 13% higher. KPR Mills, 11% higher. Rajasthan Spinning and Weaving Mills, known as RSWM, 9% higher. We track about 17 large textile mills for you. All 17 of them are in the green, and gains are anywhere between a good 2% to 15%. So that's one sector that's buzzing in the green, and you have stocks like Reliance in the green, L&T in the green, the FMCG space represented by Hindustan Unilever, 1.4% higher is in the green, as is IT led by HCL Tech in the Nifty, 1.3% higher, 1582. All told, this isn't the kind of sell-off that one was expecting, but still the battle is on between the bulls and the bears. Meanwhile, US futures, which need to be looked at in terms of what might happen today evening and therefore will be replicated in our markets. The Dow futures are up 92 points, S&P 500 futures are up 25 points, Nasdaq futures are up 89 points, but all of them have come off substantially from their intraday highs. Sakshi.
Right, time to now welcome our guest on board. We do have Mr. Abhishek Basu Malik, the founder and the chief equity advisor of Sensex Capital, joining in to help us understand more about the markets and the way forward from here. Warm welcome to you, Abhishek, and thank you so much for taking the time out. Well, how have you really assessed the roller coaster ride that has been underway? And, you know, of course, we were heaving a sigh of relief right in the morning when some part of a recovery was taking place, but again we are down in the red. So is the pain still left to be faced?
First of all, good afternoon to you and all your viewers. I think, see, after yesterday's very sharp and very big fall, the very fact that we are today, we opened up, we are holding on to more or less, opening levels, plus minus very minor points here and there. That itself is quite encouraging, that we did not have a follow-on day of, again, with large cuts, right? So that itself is quite encouraging from a very short-term perspective. So that's something to, take away from today's trade. At least, I mean, there's still about an hour to go, but, from morning till now, I think the most encouraging part is to see that we've seen some amount of recovery from yesterday.
That's very sensibly put, Abhishek. And let's hope that 24,000 is saved for at least today. Tomorrow, of course, is the weekly expiry of the Bank Nifty, which is actually getting weaker and weaker. Look at it from this point of view that it slipped below the 50,000 mark, and that's a pain point. There was a 100 DMA support which is now providing some strength to it, but from a high of 53,350, which was on 4th of July, you are somewhere below 50,000. So that's easily a 3,700 point cut that we are seeing on the index. As far as the Nifty is concerned, about 1,100 points have been shaved off in the last 2.5 sessions, but major support levels are seen. Let us see how the index navigates itself from now on, but the battle is at 49,700 for the Bank Nifty, and of course 24,100, 24,000 on the Nifty. Anything, Abhishek, you think looks good at current levels, or would you just stay away and wait for this market to settle down? Is it still a falling knife?
It's very difficult to take a call on the day or just maybe one day after such a large cut. But I am personally, I've been very bullish about India with a medium to long term perspective. And I think today I would be, being bullish today is being a contrarian. I see everyone around me very skeptical. Everyone is concerned about valuations, about stocks having run up, about everything, that people can think of. But when I look at, say, the corporate numbers, I don't see a lot of gloom and doom. I see, companies delivering, maybe not blockbuster numbers, but decent numbers. If we were talking about the banks, right? If you look at some of the banking numbers, pretty decent numbers from a large number of banks. And if you look at the valuation of banks, again, there are quite a number of banks which are reasonably valued. And that is, if you go sector by sector, that is the case with most of the sectors. What we are seeing, what I like about this entire, bull phase that we are going through, is there's been consistent sector rotation. right? And when that happens, typically you don't see a lot of froth building into one sector or in the overall market. So that is one thing which I think is very positive, that we are having continuous sector rotation. Stocks which are running up are then taking a breather for a month, 2 months, 6 months, and then something else comes into the fancy. So that way I think structurally the market is much better than before. In terms of sectors, I think there are quite a number of sectors which look interesting to me. I think chemicals are looking very interesting. Pharma is looking interesting. I mean, they've been looking interesting for a while. Insurance is looking interesting. So yeah, I mean, there are pockets where there's definitely good stocks to buy.
So, Mr. Basu Malik, help us understand this. Is there any space which you would avoid right now?
Yeah, I would try and avoid stocks or spaces which have run up very sharply in the very recent past. So, case in point, maybe defense. So I would sort of be a little bit skeptical, wait it out and see, because what happens is defense is a very lumpy sector. Numbers come in, it's not a very linearly growing sector. So quarter on quarter, things may not work out the same way. So you have to give it some time. You have to give it. You don't want to get into that sector when things have run up a lot. So I think defense is one area which I would slightly be avoiding. Even I think the solar, the wind, you have to be careful, and you have to pick your spots. A lot of fancy in those areas, lot of valuations which look pretty stretched. So you have to take a case by case bet. You're better off looking at other sectors which have not done well. Case in point, insurance, FMCG, with rural. Yesterday, I think Britannia commentary was quite bullish in terms of rural demand picking up. So those are areas where you will find a lot of interesting bets to look at, where the stocks have not done a lot, and so there's not too much of froth built in.
What do you think about this narrative being discussed, Abhishek, that one should start to raise some of the cash levels? Is there merit in that argument?
Cash level discussion is only sensible if you discuss it along with your time horizon. So if you're a short term trader, and volatility impacts you a lot, you might want to have cash. If you have a 2 year, 3 year, 5 year, 10 year horizon, you might as well remain invested, because you'll find it very difficult to time your entry, exit, re-entry correctly all the time, right? So you have to exit and enter, re-enter back. Otherwise, what will happen is, today, let's say at 24,000 Nifty, you decide it is frothy and you get out, and then uh, markets don't correct, or don't correct as much as you thought it would, and it goes up. Uh, when do you re-enter back? So a lot of problems in timing that correctly both the time. So if you have a longer time horizon, you might as well sort of stay invested. People who've been invested, say, for the last 2 years, have seen a lot of profits, and it is natural for markets to be turbulent, to be volatile at times, and that is the price we all have to pay. The volatility is the price you have to pay. You have to endure to make bigger returns.
Right, ladies and gentlemen, we are now at almost 2:45, 2 minutes left. That will mark just 45 minutes of trade left in the market. It's not looking good. So 24,000 is now with the bears. Let us see how the next 10-15 minutes pan out, because then for the next half an hour beyond 3 p.m. you will have the same trend getting replicated. What is now in terms of a pain point hurting the Nifty? And I'll show you some very interesting data. What we'll do is we'll get into the Nifty and then look at the pain point in terms of selling pressure, along with strong volumes. And that unfortunately is coming into Bharti Airtel. Despite a stunning set of numbers where first quarter profit actually doubled to 4,160 crores, Bharti is down 2%. Now this could be profit booking. Of course it is profit booking because the counter was till very recently at a record high. Almost 69 lakh shares, 69.25 lakh shares have been traded, which is 140% of the 5-day average. You have a pain point in the form of SBI, 1.2% down, 801, and fairly decent volumes, 1 crore 37 lakh shares. You have HDFC Bank 1.2% lower, volume is fairly low. M&M 1.4% lower, earnings boy ONGC 1.3% lower, and of course Tata Motors. It rose up fairly sharply in the morning, but that turned out to be a dead cat bounce, now down 0.5%. So these are the pain points that are in the Nifty, and as we see now at day's low. So what is now at test, it is yesterday's low. The yesterday's low was somewhere like 23,925. Let us see whether that holds or not. Most likely it will be tested, and then we'll progress. This is, remember, the average volume weighted price which you've seen from 4th of June when the large candle was formed. So that sort of rests at 23,925. Let us see whether that holds or not. If it does, then it will be a little bit more of strength. But for the moment you see selling pressure accelerating. And what is in pain, as Abhishek had pointed out, defense. That's where the maximum money is coming out to be. Garden Reach Shipbuilders 5% down, limit down. Even Cochin Shipyard was 5% down. You have a sell-off happening on BEML where earnings were not up to the mark, 6% lower. And of course you have stocks such as Zentech 4.5% lower. You have Masgaon 2.6% lower. These were the spaces where maximum amount of money was made. Within the railway space, you have Railtel down 2%, Ircon down 2%, IRFC down 1.3%. These are not numbers to be worried about, but this is where slowly but surely profit is being taken away from the table. Sakshi.
Sectors now coming into the fold of the bears now. The small cap 100 index has now slipped. Remember, it was up by 1.8% in the morning. That's come down, and it's now 0.1% lower in trade. The mid caps are down 0.3% lower in trade as well. Infrastructure, oil and gas have also slipped. Remember, realty was 3% higher in trade. It's shaved off half of its gains. 1.2% higher is it what is remaining within the gains. IT, metals, FMCG and pharma, just slight more gains that are coming in over here. Of course, on the Nifty, you have Britannia, GSW Steel, Tech Mahindra, LTI Mindtree. So some tech stocks, some FMCG stocks that are still holding up. But even in the PSU pack, large part of the stocks have actually slipped into the red, barring some stocks like, say, a Concor or an NTPC or an IRCTC. These are the ones that are remaining up into the green. But you know, the entire sector, what Shell also highlighted, this entire textile space that seems to be gaining ground on perhaps some benefit emerging out of the Bangladesh crisis for it. SP Apparels, Kitex Garments, KPR Mills, Lakshmi Cot Spin, we have Dollar Industries, Surya Lakshmi Cotton Mills, Ruby Mills, all of these stocks which are now rallying sharply in trade. Should one partake within this momentum at all? Abhishek, what do you think?
See, I mean, to look at the company individually, but I think there is going to be some amount of change or some amount of order flow redirected from Bangladesh. That is going to happen, but it's not going to happen overnight because most of these large contracts have 3 months, 6 month, 1 year duration contracts. So it's not that suddenly the clients will stop taking from Bangladesh and come to India. Most of the large clients have multi-vendor approach. So obviously there would be some maybe emergency buying if things are temporarily there's some supply disruption within Bangladesh. Uh, so sentimentally, yeah, I mean things could change for the benefit of India in the next few days. But I don't know whether it will be a sustained change. We need to wait and watch for that.
Okay, got it. But within the FMCG space, have you increased a lot of your focus of late? Do you think with the way the texture of the market is changing, one needs to hedge their positions with a lot of defensive names in their portfolio right now? Do you have that viewpoint?
See, I think the interesting part we are seeing is the sectors which are looking, good and looking strong are the ones which are defensive. So whether it is pharma, whether it is FMCG, whether it is IT, these are traditionally defensive defensive sectors, and which also sort of tells you that markets in their wisdom are maybe slightly apprehensive about what is going on in the world, right? So there is a flight towards relative safety. Within that, I think India the FMCG uh, pickup can actually help a lot of these larger FMCG players, because they've sort of not done anything. Demand has been sluggish for a while. So, I mean, yes, there is definitely a case for looking at FMCG, uh, especially FMCG focused on rural demand.
Into pharma. Two all-time highs in this kind of a market. Torrent Pharma 3% higher. Granules we've discussed 650 now, about 1.5% higher. Now here is the most interesting part. When you look at top gainers, look at the percentage rise. 4% on Natco Pharma, 1360. This is consolidating at 52-week highs, almost record high. I'm fairly certain on the chart there. Let's look at some more stocks. Ipca Labs 2.7% higher. You have Cipla and Sun Pharma doing pretty well in terms of the weekly gains. Lupin has its earnings today, therefore 1.5% lower. And till very recently, you had a record high on Aurobindo Pharma as well. So absolutely, defensives are sort of where this profit booking and this money is going into. And let us see how this moves forward. The other thing I wanted to point out was how the PSU stack is faring up. Look at JK Bank, 2.1% higher, 113. Remember in the morning I had mentioned we track 85 PSUs for you. At that point of time only 2 were in the red. Well, the tide has turned almost completely. Now about just 10-11 PSUs are in the green, and even those gains are not sort of worth mentioning. But one stock that stands out in terms of strength is NTPC, 416 rupees, still about 0.5% higher. And of course, within banks, you have Canara Bank, which is barely has its nose above water. And of course, you have a fertilizer stock, Fact plus Bharat Dynamics. Apart from that, there are losses all around, led by 3 defense companies. Cochin and Garden Reach down 5%, BEML down 6%, dredging down 4.5%, Shipping Corporation down 4%, and the list goes on and on. So that's how, ladies and gentlemen, the profit booking is acting on the market. So far, the Nifty is now 23,977. Remember, yesterday's low was 925. Let us see whether that holds or not. But for the moment, the last 30-35 minutes of trade begin. Sakshi.
Okay. Let's also ask you on the IT pack. Mr. Basumali can help us understand, within the IT space, post the earnings, how have your, funds deployment towards the IT space changed?
See, I think IT is one space which obviously has not done well fundamentally over the last 1 year. There's been a lot of talk of problems in terms of demand, coming in. And I think that phase is now sort of getting over. The next 1 year is going to be much better than what we saw in the last one. So, looking forward, I think IT looks much better. Uh, I think even hiring in IT companies have started, uh, although it's sort of a bit slow, but it's definitely on the rise, and that's always a good indicator of how the Indian management, the IT company management, thinks about their prospects. Uh, the other part is, I think, if you are focused on mid cap IT, I think they might do actually slightly better than the frontline names. So mid-cap IT services, mid-cap ER&D is where I think would be good places to get.
Okay, so mid caps is where we can keep an eye out on within the IT pack right here. Um, I also wanted to get a sense as far as the telecom space is concerned. We haven't spoken with you on that. With respect to the kind of moves that were coming in a few months ago, and now the tariff hikes that have already taken place, earnings have come in for Bharti Airtel. How are you really looking at the entire telecom story unfolding? Bharti Airtel, Jio, Vodafone, Indus Towers, Tejas Network, some such stocks, HFCL. How are you looking at such stocks?
So I think most of these, especially Reliance, Bharti, these are the two front runners in terms of being service providers. I don't think they have a lot of opportunity right now in terms of increasing their margins, increasing their ARPUs anymore. So already they've done a little bit. India is a very, very price sensitive market. So increasing it further from here is going to be tough. Uh, Indus Towers, again, is more a function of uh, how Vodafone is able to sort of pay them back, how quickly, and then it sort of will do well or not so well, depending on that. The cable manufacturers, etc. Again, I mean, nothing specific. They're not related specifically to telecom. So overall, I don't think this is a space which will excite me a lot. These are typically the I mean, how should I put it, the regulated kind of entities where uh, they'll find it very difficult to make disproportionate amounts of profits.
All right, so that's the view that's coming in. Let's look at some more spaces which we can highlight as of now for Mr. Basmulik. Royalty, IT, metals, FMCG, pharma and infra, these remain still in the limelight, but the rest of the spaces within the markets have all slipped into the red. Are you still bullish on the infra, manufacturing, building materials story? I remember last time when we had discussed the real estate space with you, you said that best way to perhaps approach is with the ancillaries that may be continuing to garner all the attention. How are you deploying further funds now within the
I think
space?
I still have the same view in all these. I mean, whether you look at autos, whether you look at real estate, whether you look at infrastructure, uh, you are actually better off playing the ancillaries who have a sort of maybe a pan India market, selling to the OEMs or selling to other people. And most of the time, the ancillaries have better balance sheets, better visibility in terms of order book. So I would much rather, so for example, in real estate, right? I would much rather play a plywood manufacturer or a sanitary ware maker than maybe a builder, unless of course the builder has it's very well is very reputed, and they have a very good pipeline for the next 2-3 years.
Ladies and gentlemen, almost now 3 p.m. for us. The last half an hour of trade begins, and two wishes. One, the Nifty closes above 24,000. and the other it holds its budget low, which is 24,074, somewhere in that vicinity, 24,050, 24,070. For the moment, I seem to be in a minority, but what is good news is that the Nifty is above 24,000. Let's see how half an hour pans out, and we'll be shortly welcoming Mr. Amar Singh, Senior Vice President for Research at Angel One Stockbroking, and of course our very own Mr. Devan Choksi, MD DR Choksi FinServ. They will be joining us shortly on the last leg of today. 24,017, ladies and gentlemen, on the Nifty. The Bank Nifty is down 0.5%, 49,800. The Nifty 500 is also breathing easy, 22,508 for you, down just 34 points. The IT index is in the green, so is the realty index 1.3% higher. The pharma index about a quarter of a percentage point higher. FMCG is mildly in the green, and this is how the systems are poised. Good time as any to look at record highs in the NSE 500. Remember, whenever there's pain in the market, just look at the sector where money is moving in, and it's textiles as also FMCG. KPR Mills 12% higher, 932. Surprise, surprise, Patanjali is at an all-time high, 1764, 4.5% higher. Within the pharma space, there is a crisis of plenty. Torrent Pharma, Granules, Glaxo India. Glaxo we don't talk often, but this is a fantastic pharma MNC that is doing phenomenally well. 1 percentage point higher, 2790. Ajanta Pharma, and of course our very own favorite that we've been talking about, Colgate Palmolive, 3396, about a percent higher. The smile on the FMCG part of the market is getting brighter and shinier as far as Colgate is concerned. Sakshi.
Let's welcome our guests on board. Mr. Devan Choksi, the MD of DR Choksi FinServ, is now with us. Warm welcome to you, sir. Thank you so much. And we also have Mr. Amar Singh, Senior Vice President Research of Angel One. Warm welcome to you, sir, as well. Mr. Choksi, let me begin by understanding from you. I want to first understand, is the storm over, or is there going to be more pain going forward from what we have seen yesterday? There was a relief rally in the morning, but the markets have again slipped to the day's low. What is the market fearing now?
Good afternoon, Sakshi. Well, I think in my understanding, any kind of technical disruptions when they happen in the market, they have a short life. They normally do not have, I think, long life. It may probably, I think, drag the market for a while, but I think they not necessarily, I think, continue to create more and more dent or more and more bottom in the market. So if yesterday's fall was largely due to technical reasons, then I would like to believe that yes, I think the fall probably, I think, has completed. Also because of the fact that I think on the other side, Indian investors have been putting in sizably large amount of money into the markets whenever it falls. That is basically, I think, arresting the fall to a greater extent. And yesterday's fall was accentuated, I think, because of two reasons. So one, of course, I think the selling done by the foreign investors who are largely traders, but also because of the fact that I think they unwinded their entire positions. I think in the trading indices, I think the ETFs and the index funds, they actually unwind position. And that's where probably I think you saw the panic sell-off in that counter, in those counters ultimately. But to me, I think as long as the fundamentals remain intact, which they are, I would like to believe that I think the fall is not going to be deep. The fall is probably, I think, arrested at this point of time. And maybe I think recovery will take some time, I think, from here on. But the stability is definitely on as much as I see it.
Namaste Devan Bhai, a very warm welcome to you, sir. As always, a very calm voice is needed to tell the market that this is a technical readjustment happening in prices. Remember, the fight is between the US dollar and the Japanese yen, where speculators who borrowed at next to zero cost are now made to pay a heavy price. Not only are they bearing the burden of heavy losses, they are also buying back the yen and giving it back to the lender. That's the only problem, ladies and gentlemen. between two economies and two markets. It's only us that are being paying a minor price. Remember, 13-14 percentage point fall on the Nikkei. The Nasdaq over the last 4 or 5 trading sessions has dipped 13%. We are down just 4%, and that points to resilience, that points to strength, that points to how domestic investors led by institutions are buying into this dip. Yesterday's FII selling was 10,000 crores. Yesterday's DII buying was 9,200 crores, almost one for one. Devin bhai, what looks good to you? In terms of just stock names, maybe the price will correct a little further over the next 1 week or so. But what is on the radar as far as large caps, mid caps, and small caps are concerned, sir?
Yeah, Shail, I think across the board, I think the opportunities are there in the price today. If till yesterday market was sounding a bit expensive, today it has only gone down to an extent, I think, where probably it has become more protecting on the downside to an extent. Look at, I think, some of the banking stocks where you can definitely remain very, very strong as far as I think your investment approach is concerned. They are available at corrected valuations. Look at, I think, the companies which are basically there in engineering, R&D space within IT. They are available at a corrected prices. Some of the auto ancillary companies, OEM companies in auto space, particularly in the commercial vehicle space, available at corrected prices. So, in my viewpoint, as much as I think the fundamentals are supporting these businesses, I would like to think that I think this is a corrected price which is definitely making sense for an investor to buy into. Now, whether an investor would like to buy now or maybe I think at a significantly sharp corrected prices, my take would be that individual stock specific actions will have to be taken. In some of the stocks, I think where the fall is sharp and large, those stocks I think will become I think the prime target to buy today as against the across the board buying happening in the market. So I would rather like to be stock specific in this scenario. Maybe I think I have alluded by saying the sectors which seem relatively more positive at this point of time.
Okay. Let's get in Amar also into the conversation. Amar, to you, how are you really making the best of the opportunity that exists between yesterday and today? Have you added some of the stocks and advised some of the clients to buy the dip at all?
Yeah, I would say that overall we've been positive for quite some time now, and but what currently we are seeing some sort of consolidation and some I would say profit booking not only in our markets but in global markets as well. So I would say that and the sharpness with which we witnessed the correction yesterday. So that clearly tells me that an intermediate term top seems to have formed in the markets from a shop, because some of the long term indicators continue to remain strong and positive. So effectively it means is that any correction can be looked as a buying opportunity, but we shouldn't look at catching a falling knife. That's very important. Having said that, I would say we are seeing some sort of selling pressure there coming. So, and global markets per se, with regard to the fall that we witnessed on the back of US data as well as rate hikes in Japan. But I think the US Federal Reserve is also likely to look at this very closely, because if they don't act sooner than later, maybe we could witness more volatility in coming days and weeks. I view this as an opportunity to buy, but one shouldn't really be in a hurry. One should rather wait it out and see and let the market consolidate for some time before entering into fresh positions.
So, Amar, like, once the correction is largely done, that you believe, which is the first one or two sector that you will start to deploy funds in, and the key stocks also, if you can highlight?
See, we've been quite positive on FMCG for quite some time now. And FMCG and pharma, these are two specific sectors which have really performed quite well. And despite the correction in the markets, we've seen them hold out quite firmly, be it Colgate or for that matter, Godrej Consumer Products. We've seen them hold out quite firm. And even in the case of Hindustan Unilever, because this also hasn't really corrected its more or less consolidation. So these are sectors, in terms of sectors, FMCG pharma could be one can keep a close watch on. And amongst the stock, we could witness some positive movement on these a few stocks like HUL or Colgate Palmolive. As far as some of the other I would say stocks in the FMCG, we are seeing some sort of profit booking there, like Marico. But overall, this is one sector one can keep a close watch on. And the second sector, which I talked about, pharma, is another sector one can keep a close watch on there as well. There we've seen some very good moves in the pharma space. And if you look at the likes of Alchem, so we are seeing some sort of consolidation there, or Vindo Pharma is another one. Cipla is also one can keep a close watch on. So these are some stocks from the pharma space that one can have a view on.
Right. Devin bhai, coming back to one of the oldest segments in the market, which is textiles, the zinc is back, and that's back because of the problems that are being faced by our eastern neighbor Bangladesh. Any favorites in this space? All those, Vardhaman textiles and spinning mills, Rajasthan spinning and weaving mills, Arvind Limited, Banari Amban spinning, what are the other names? Ambika Cotton. These are all 30-40-year-old listed companies which are coming back in fashion. Any favorites here, sir?
Yes, and I think the limitation part in this particular entire space is the size. Probably, I think whole companies listed together wouldn't have market capitalization equal to some of the mid-cap companies. So that's where I think the bigger challenge lies in this particular sector. That even if a sizably large investor wants to take a bigger exposure, I think most of the companies would probably stay within the small bracket of market capitalization. And that's where I think this sector doesn't become a very attractive proposition for investors to come in. Having said that, yes, I think there could be a sentiment-driven bid, which will probably, I think, start flowing and give a tailwind kind of a pressure, I think, for the companies to look at from the investment point of view here. In my viewpoint, I think some of the technical textile businesses, they look relatively more stable. Though I think they may not be immediately favorite for the investors to buy them into the portfolio, but I think they probably look, I think, relatively more stable. The likes of Garware, for that matter, I think even you mentioned Vardhman. I think some of the players, I think even in some small companies also, which I find, I think they have relatively stronger proposition to offer from investment point of view. But as I said, the bigger investor will never walk into it because the size of the sector per se itself, I think, is very, very small. So a serious large money cannot come into this space. I think the small, mid-size, or the smaller investors will possibly put money into it.
You have a fair point in terms of this sector's inability to attract institutional money, but nevertheless, as I have been mentioning since the morning, look at Gokul Das exports 13% higher. Again, needless to say, this is a record high. A very big beneficiary of the potential business moving out of both Sri Lanka and Bangladesh, plus the the UK FTA, which is most likely to be signed between the governments of Great Britain and of course India in the short while. Amarji, namaskar. Your view on Gokul Das exports. What are the charts telling you on this one? Fairly strong volumes today as well. You have a 13% uptick, which was earlier in the morning, 18% higher. 33 lakh shares have been traded of Gokul Das exports.
I would say, as you rightly pointed out, that with the turmoil happening in Bangladesh, and Bangladesh being a major player in the textile sector, so that would have a spillover effect on our markets as well, and that could be an advantage also for some of the companies operating out of India. And I think that's what we are witnessing in some of these textile stocks, and Gokul Das exports also being one of them. What we are seeing in Gokul Das is that the trend definitely continues to remain strong and positive from a long-term perspective. And the stock at a point of time, if I look at the long-term charts, the stock was finding some sort of resistance around the 1020, 1025 zone, which the stock has taken out. And today's volumes have been exceptionally high. So whenever volumes are exceptionally high on any particular day, you have to take it with a pinch of salt, because if the high of that high of the day isn't taken out consistently, that could mean that there could also be a short-term top being formed. But overall, if you ask me, Gokuldas exports continues to remain strong and positive on the long-term, intermediate-term trend. And if the stock sustains above the 1020, 1030 zone for a couple of days, then we could see further upside rally in the stock. So one can keep a close watch on this stock.
Okay. A lot of these NBFCs are still hovering higher. Stocks like Home First Finance, it's up 6%. Credit Access Grameen is up 2.4%. PNB Housing Finance. You also have IIFL. Then something like an SBFC Finance, Aptus Value. These are the stocks that are still holding up as of now. Overall, Devin sir, wanted to understand how are you looking at the NBFC space? We've spoken largely on the PSU banks versus private banks, but the NBFC space, especially the home finance, housing finance companies, what is your sense right now?
There is a reason to remain bullish about, I think, the entire space per se. And we are not so very comfortable giving a weightage to a sectorial NBFCs like gold finance, etc. But we are in general very comfortable giving allocation of our funds into the retail NBFC and housing finance NBFCs. That's where probably I think we believe the growth rate is sustainable, because on one side with the size of GDP growing, on the other side I think the higher amount of credit offtake is taking place, and that's where I think the 20% plus kind of a credit growth in the retail finance segment, including housing finance segment, is continuing, and that's where I think you have a long-term scenario intact for them. However, by selecting the company within this space, we would probably give maximum weightage to few factors. One important being the size of the balance sheet. If the company is with a larger size, stronger net worth, and ability to mobilize deposit at a competitive rate, they will be the one which will be the preference for us in the investment portfolios. Those companies which are typically, I think, smaller in size, find themselves vulnerable in a given situation of raising, mobilizing deposits, they will be the last one to get the preference into the portfolio. So I think one will have to be very judiciously selecting the investment options which are available in the marketplace. And at this point of time, and also earlier said before, as said before, we believe that I think this is an era, this 10 years belongs to those companies which has
Yeah.
a size. So big is getting bigger. That is what our proposition is, and that's where I think we keep our focus on very steady.
Got it. The other space, Devin sir, I wanted your attention is the entire new age internet space. We've seen Zomato, the earnings came in, stock has rebounded, fresh lifetime highs, brokerage houses are raising the targets now, especially on the bank of Blinkit profitability and the sharp increase in overall consolidated profits that the company has displayed. We did see delivery, also numbers coming in, a turnaround in that fashion as well. Paytm has been reviving from the lows that was seen, and the ghosts of Paytm's Payments Bank that now seem to be, being buried at least for now. How are you looking at this new age internet space, and what looks good to you even now?
And I think most of the what you call developments are in price as far as I think companies like Zomato is concerned. No doubt, I think they have started getting the benefit of the platform access fees that they've been charging, and which has possibly, I think, tried to cover up whatever the loss-making proposition they've been operating the company with to a greater extent. But look at the valuation at which they are quoting. The valuations are not cheap, and for a size of profit of 1,500 crore kind of a yearly profit, we are talking about a significantly large amount of valuation, which is running into 5 digits plus. So obviously, I think this is where probably I think we will be mindful about it. Also, the fact that I think all these last mile delivery companies, the quick commerce companies included, I believe that I think they'll have a limited ability, probably not from the market point of view. Market will still be expanding for them. Limited ability to pass over the kind of I think cost that they've been charging on today, because the customer always has a second option. Suppose if you are in a nearby place, I think your local kirana stores or somebody will deliver to you without charging additional cost. Whereas I think these companies have started charging the restaurant access fees. So ability to transfer the cost, I think, for the delivery of services will always remain little bit limited. I think from a perspective of looking at the growth in this environment. So one will have to be mindful about the valuation that one is paying to these companies. Great models, but I think one will have to be mindful about the valuations. That is what my limited point is.
Okay, ladies and gentlemen, 3:20, just 10 minutes of trade is left. Let's sort of try and wrap up parts of the market. 23,986, so 24,000 is not happening. My wish will not be granted. It's a minus 66 point cut on the Nifty, but two sad points. The high hasn't been held, which was 24,300, and forget the high. Even 24,000 seems to be lost, at least for today. Let's see what holds for us tomorrow. But a moot question, Devan bhai. Two stocks have slipped out of our collective consciousness. One is Geo Finance, now 311. The most recent high was 394. And the other, of course, is your favorite Bajaj Finance, well below 200 DMA, well below 7,000 rupees. What exactly is happening here? Why have investors, even long-term investors, pressed heavy sales on these two counters?
So, Shail, as I see it, I think this particular market is basically buying strongly on narratives. They are not necessarily buying the numbers. And that's what I think the challenge would be in this market. When the mood has changed, the sentiments have changed only in the area of, I think, listening to stories. They want to undermine the strength of the numbers. I can take you to the example of Bajaj Finance. Now, Bajaj Finance is one company which has been clocking its AUM at a 30% plus rate of growth on a sequential every year on year basis. It's not easy at all. I think when your economy is growing at around 10, 11, 12% kind of a nominal growth, you're at least growing three times faster to your economy and expanding your credit book. Now, this is significant when it comes to the ability and capability of delivery of this kind of requirement in the marketplace, which this company has accomplished. So instead of getting a premium, they are not getting a preference at this point of time, largely because the narratives are shifted to smaller companies, smaller banks, smaller market cap businesses. Second thing, I think these companies are also basically, I think, having a character of long-term growth. So obviously, they don't want to play the market on a short-term basis of opportunities. Some of the NBFC companies, I think, would allocate significantly large sum of money where I think the larger amount of growth is. For example, gold finance companies. They would probably, I think, undermine the risk and they would allocate a significantly large sum of money. They would produce higher growth and market would follow that particular narrative. In this case, it is not so. So, in my viewpoint, fundamentals are not negative. Fundamentals remain absolutely strong and convincing. It is a market narrative which has not yet happened for these companies. Sooner that happens, maybe I think we'll find that I think these companies will also have the queue of investors jumping into it, and they will be buying at a price I think which will be then expensive price. So in my viewpoint, I think I don't necessarily I think get disturbed with this kind of a trend. We believe in lots of patience while investing, and we believe that as long as the business model of the company delivers continued performance, one should not be unduly getting anxiety about I think all this. Same is the situation with Geo Finance. Companies yet to commence the business model, but underlying promise remains absolutely very strong. They have actually acquired the CIC license, the core investment company license from RBI, and that's where I believe that I think they will have a faster ability to grow the business at much rapid pace. Also because of the fact that I think they have all the necessary ingredients in place, strong balance sheet in place, customer base is in place from Reliance Retail, the technology platform is in place from the Reliance Geo platform, and I think the CIC license, which allows them to acquire the companies and I think start the business immediately on the word go. So all in all put together, I think the proposition remains extremely strong and convincing. Market is not buying this narrative, and that's why I think they are out of preference at this point of time. But for investors, I think one should not be unduly worried about this kind of a trend in the market because market at times remain irrational, and that irrational behavior does not last long either.
Fair point. And your final view on the telecom business of Bharti as also Indus Towers. Do they represent an opportunity at current levels given the earnings that have come in and of course the new set of people who are driving the shareholding pattern of Indus Towers? These two stocks.
Valuation wise, Indus Towers, I think definitely not expensive at this point of time. Since they are in the process of repairing the balance sheet from receivables to received, I think that particular proposition will definitely make the case for them to attract new investors together. I'm not too sure how much I think further re-rating can take place from the current level of valuation. But if the balance sheet gets clean and if the company is adapting to the faster growth process, could be I think a better way to look at this company henceforth. Bharti definitely, I think, is on a strong buzz of having increased the postpaid tariff and ARPUs. I believe that I think they would be in a better position to I think generate the higher amount of ARPU and so with the profit. Maybe I think from a single digit, I think they will probably start producing double digit of return on capital growth among others. So that's where probably I think one will remain a little bit more optimistic than ever before in this business.
Okay. Let's get in Amar into the conversation. Amar, I wanted to ask you on the power financing names, especially PFC. It came out with the earnings, and after the net profit rose by about 24% to 3,718 crores, 3.25 rupees per share dividend has also been declared by the company, but the stock has fallen flat. So I think this has disappointed the street with the expectations that they had as well. Your own sense of how should one look at these outperformers now that the earnings are not meeting somehow the street estimates?
Yeah, I would say that we have to look at it from a perspective from a medium term to I would say long term, because if you look at this is one of stock one definitely has been a multi bagger, and last year itself it was trading at around 200 levels, and currently it's around 475 after hitting a high of almost 600, 580 to be precise. So we've seen some significant rally. So I would say that any pullback is to be looked as an opportunity. However, what we are seeing is that on the long-term charts, though the stock continues to remain strong and firm, on the intermediate-term trend, we are seeing some sort of weakening or fizzling out of the trend which was earlier there. So we could witness some further correction. Levels to watch out for the stock on the downside is somewhere around 460. So 450, 460 is a very crucial zone of support for the stock. If that is not taken out and the stock consolidates, then we could witness a pullback. Otherwise, we could witness some further selling pressure in the stock towards the 420 levels.
Okay. Devin sir, just last one question to you, and that will be as far as the strategy now going forward from here. All eyes will be on RBI, the way it now talks about the interest rate trajectory. That will be the next big key event that the markets will be looking forward to. Of course, the global events as they unfold will be something that the markets will continue to watch out for. What is the prudent strategy that investors, retail investors who've been fully invested in the markets, they should adopt now?
Well, I think when you're fully invested, I think stay invested. That's one line. But more importantly, I think this market is offering opportunities on every single day into newer sectors, newer businesses. So generating some part of the cash when the market is on high is in the individual stocks specific basis, and keeping it ready for a fall like what we saw yesterday. Those kind of falls, I think, would be given to investors, I think, once in a while, in a quarter or two, wherein I think they get the opportunity to buy afresh into the market. Otherwise, I think my take would be that I think wait for some good quality, fundamental driven, deep value buy opportunity in respective areas of businesses, be it discretionary consumption space like automobiles, auto ancillary, or even for that matter ancillary space to the capital goods sector, or for that matter ancillary space to the building material segment. Those kind of businesses I think could possibly give you reasonably good return, provided I think you sit on cash for a while and invest in when the market gives you an opportunity.
Okay, ladies and gentlemen, let's wrap it up. Okay, 24,000 is back on the screen, and that's a plus for me at least. 24,027. The Nifty is down just 28 points. I would take that as a sign that perhaps a large part of the pain is behind us. Now let us see what's causing a lot of action on the bull side of the market. We'll start with the pullers and draggers. L&T Remember, it had put in a fantastic set of numbers. Remember the order book. 18 points high, contributing 18 points to Nifty's color of green. Reliance contributing 18 points. Lever taking it away, 1.5% higher. Remember, this is the flagship of the defensive counters on the FMCG space. TCS and HCL Tech doing a fabulous job for the Nifty. Very, very quickly, I'll mark the top gainers on the Nifty. Britannia 2.7%. Remember FMCG. JSW Steel 2.5% higher. L&T Tech Mahindra Hindustan Unilever we have discussed. Let's look at the losers side. HDFC Life, SBI Life. Shouldn't be worried about at all. You are booking profit here. Remember, they are at record highs. BPCL again record high, and that is where the profit is being taken away, 1.8% lower. SBI, fantastic set of numbers. Sadly, they came at a time when the market did not appreciate them. 1.5% lower, 799. Are there any record highs in the Nifty today which we should follow up very quickly? No. Yes, Colgate Palmolive, 0.5% higher, 33.90. Record highs in the FNO space, Granules and Torrent Pharma. Record highs in the NSE 500 space, Patanjali, Glaxo, Ajanta Pharma, and of course Philips Carbon Black. And finally, let's look at the most active volume. Okay, Zomato down 2.9%, 249, 3,700 crores worth of transactions have happened. HDFC Bank slipping a bit, 0.2% lower, 3627 crores. Tata Motors in the green, that's a plus, 1700 crores. ICICI Bank, FSL and Reliance are the top 6 traded counters. Sakshi, this is all from my side. I believe it's a big plus that the Nifty ended above 24,000.
Our guests for giving us those meaningful insights into the markets and the key strategies for our viewers. Thank you so much, Mr. Choksi, and thank you so much, Amar, for being with us on this very special edition and sharing all your thoughts and insights. Truly appreciate your presence with us on Business Today Television as always. We have a red ending on the screen, but it's just like how Shell says it, it's good to look at the positive side. We've closed above the 24,000 mark, 21 points lower, however, on the Nifty right now, about a 0.6% of a decline for the Nifty Bank. Large parts of the markets did see some selling pressure at the higher end. So we did have the realty, metals, IT, FMCG and infra closing in higher in trade, albeit the rest of the sectors pulled lower in trade. Tomorrow again will be a new day. Let's see how the global market setup really provides us some kind of support for another day and another buoyant start or not. We'll thank you at that note for being with us on the closing edition of Market Today. Thank you from both Shell and me. But do stay tuned as action continues on your screens even beyond the stock market hours. So how would you look at Bharti Airtel, for instance, that reported its numbers? We've seen a slew of brokerage houses reports as well. So Citi has a buy call with a target of 1750. Macquarie has a neutral call with a target of 1280. UBS also has a neutral call, but 1530 is their own target as well. Most of the brokerage houses believe that Q1 was largely in line with expectations, and now that all eyes will be on how the tariff hikes will be in the coming quarters as well. How would you really look at Bharti Airtel now post the earnings?